worked as a child of Payroll's embrace, but now I see it's
Hello and ni hao. Welcome to the next stop on our Global PayFest 25 journey. I'm Natalie Lloyd, Customer Success Manager at JGA Recruitment Group, and I'm delighted to be your host for this session focusing on Singapore payroll. We're now in the third hour of our 24-hour journey around the world, and we're exploring global payroll systems. We've now turned our attention to Singapore. It's a major business hub in Southeast Asia with a highly efficient but distinctive payroll framework. For multinational organisations, operating in Singapore or considering expansion into this market means that understanding the nuances of Singapore's payroll system is crucial for compliance and operational success. Today, I'm absolutely thrilled to be joined by Devi Murali. She's an international payroll lead at Deliveroo. Devi brings an impressive 15 years of experience in managing payroll operations across multiple regions, with particular expertise in Singapore's unique requirements. Devi, thank you so much for sharing your expertise with us today. Would you mind briefly telling our audience about your experience with Singapore payroll?
Sure. Hi, Natalie. Hello, everyone. I'm Devi. I'm the international payroll lead at Deliveroo. I have 15 years of experience from diverse sectors, managing various country payrolls and payroll-related projects and automations. I have worked for MNCs like ADP, Autodesk, Mintel before joining Deliveroo. This is a short summary of my profile.
Thank you. Thanks so much, Devi. So during our session today, we'll explore the key aspects of Singapore's payroll system. That will include the Central Provident Fund, which are called CPF framework, recent regulatory updates, and any best practices for multinational organisations. We'll then go on to examine a practical case study, and that will illustrate how to navigate those common challenges. And like the other sessions, we will finish up by addressing some key questions about Singapore's payroll operations. So let's get started. Devi, would you mind telling us the ins and outs of Singaporean payroll?
Sure. Thank you, Natalie, and hello to everyone joining us for Global PayFest 2025. I'm delighted to share insights into Singapore payroll landscape and the unique features of processing payroll in Singapore, which is an important business hub, as mentioned by Natalie, in the APAC region. Let's talk a bit more about the Singapore payroll ecosystem. Singapore's payroll framework is known for its robust legal framework, efficiency, and clarity, but it does have distinctive features that international organizations need to understand. Let me share some of the important terms you will come across if you have payroll in Singapore. I would say these are must-knows. First one is Central Provident Fund, called shortly as CPF, a comprehensive social security system that requires contributions from both employers and employees as per CPF Act 1953. This is designed to fund retirement, healthcare, and housing needs. Second one is Inland Revenue Authority of Singapore, commonly referred as IRAS. IRAS oversees income tax obligations and employer reporting requirements as per Income Tax Act in Singapore. Next is Ministry of Manpower, shortly termed as MOM, responsible for formulating and implementing labor policies to ensure a balanced, inclusive, and fair work environment in the country. It manages employment standards, workplace safety, and the welfare of both local and foreign workers. And the last one in the line is Employment Act. This is Singapore's main labor law. It provides basic terms and working conditions for all type of employees, with some exceptions. Let's see some of the key payroll challenges in Singapore. Maybe let's start with Central Provident Fund contributions. As said earlier, CPF is Singapore's social security savings scheme designed to fund retirement, healthcare, and housing needs. Managing CPF contribution correctly presents several challenges. In terms of CPF contribution rates, these vary based on employees' age, citizenship status, whether the employee is a Singapore citizen or a permanent resident, and classification of wages, contribution of ceiling limits. Current contribution rate for Singapore citizen and third-year permanent resident range from 37% of wages of employees who are aged 55 and below, with employer contributing 17% and employee at 20%. lower rates for older employees, and progressive rates for new permanent residents in their first and second year. Um, then about wage ceiling, wages are classified into ordinary wage and additional wage for CPF. Ordinary wage ceiling is $7,400 per month, and additional wage ceiling varies based on annual ordinary wages. Altogether, the maximum threshold of income subject to CPF is 102,000 per annum. CPF contribution is allocated into different accounts by CPF post submission by employers. It is allocated to ordinary account, special account, MediSave account, and retirement account. The complexity increases when managing mixed workforces with different citizenship statuses and age groups, requiring careful configuration of payroll system to ensure accurate calculations. Next, let's talk about foreign employment in Singapore. Singapore has specific requirements for foreign employees. There is no requirement for CPF contribution in Singapore for foreign employees. This creates two distinctive payroll processes. And there is a skill development levy. This is mandatory for all employees, both local and foreigners, at 0.25% of monthly remuneration with a minimum of $2 and maximum of $11.25 per employee. Then foreign worker levy, which is called as FWL, applicable for work permit and S-pass holders with rates varying by sector, qualification, and dependency ratio ceilings. Next, let's see some of the tax reporting and compliances in Singapore. Singapore has a progressive income tax system, and the tax ranges from 2 to 24% based on individual's income. Exciting news for employer here is there is no tax withholding requirements in Singapore, but there are employer obligations on tax reporting. Singapore's tax reporting requirement include preparation in participation in auto inclusion scheme for employment income. Employers with 5 or more employees must submit employment income information directly to IRAS using AIS. Due date for this tax reporting using AIS is 1st of March every year. There are different forms used based on the nature of payment. Form IR80 is required for reporting employee remuneration. And Form IR8S, this form must be completed if employer have made excess CPF contribution on employees' wages and have claimed or will claim refund on excess CPF contributions. And there are Forms Appendix 80 and 8B for benefits in kind and stock reporting. Next, this is a very important topic, tax clearance for foreigners in Singapore. This is mandatory for foreign employees ceasing employment or departing Singapore. This form is called IR21. This need to be filled at least 1 month before employee leaving employment. And salaries need to be withheld until the IRAS review the tax for the individual and the tax directive to the employer. Managing this timely is crucial to avoid penalties. And next on the line is leave entitlements in Singapore. This is very important for employers. Singapore has a specific statutory leave entitlements. Let's say annual leave, minimum 7 days for the first year, increasing by 1 day per year of service up to a maximum of 14 days, though many employers offer more generous terms. Then public holidays. There are 11 gazetted public holidays annually with specific rules for work on public holidays. Compensation with alternate days off or additional day salaries is mandatory if the public holiday falls on a weekend or a rest day. Sick leave. Employees are entitled up to 14 days of outpatient sick leave and 60 days of hospitalization leave, including the 14 days of outpatient sick leave. There is childcare leave as well. Employees are eligible for 6 days per year for parents with children under age 7. This is subject to eligibility criteria mentioned in the website. 3 days out of 6 days can be claimed from the government using the GPL portal if the child is a Singapore citizen, subject to per day capping. And there is an extended childcare leave if the children are above 7 years and up to 12 years of age. And the same can be claimed from government if the child is a Singapore citizen. And again, it is subject to a per day capping as well. And 2 days is the entitlement for extended childcare leave. And next is maternity leave. Working mothers are entitled for 16 weeks of maternity leave if the employee is a Singapore citizen. 8 weeks can be claimed from the government in the GPL portal again. And paternity leave, 4 weeks of paternity leave from 1st April 2025. Previously, it was only 2 weeks. And shared parental leave, 6 weeks of shared parental leave from 1st April 2025, subject to eligibility criteria as well. And Singapore is refining its employment and payroll regulations every year. So let's look into some of the recent regulatory updates. First one is the progressive wage model. Singapore is expanding its to more sectors now. They are expanding minimum wage levels for Singaporeans and permanent resident workers in specific industries based on skills, productivity, and career progression. Next, Retirement and Re-Employment Act changes. The retirement age is raised to 64 from 1st July 2025 and re-employment age to 69, affecting how organizations manage older employees. Changes which employers need to be aware of. So let's start with progressive wage model. Singapore continually refines its employment and payroll regulations. Recent and upcoming changes include a progressive wage model. Singapore is expanding it to more sectors, establishing minimum wage levels for Singaporeans and permanent resident workers in specific industries based on the skills, productivity, and career progression. Next, there are some changes to Retirement and Re-Employment Act changes. Retirement age is raised to 64 from 1st July 2025 and re-employment age to 69, affecting how organizations manage older employees. There has been some changes to workplace fairness legislation, new anti-discrimination framework providing protection against discrimination based on nationality, age, race, religion, gender, and disability. And there is a CPF rates have been adjusted as well. This is these are phased increases in CPF contribution rates for senior workers to enhance retirement adequacy. There is also an important change in terms of CPF. Platform workers and platform operators who are Singapore citizens and permanent residents will be subject to Central Provident Fund CPF contribution regime. Platform operators will be required to deduct CPF contribution from platform workers' earnings and submit them to the CPF board every month, together with the platform operators' share of CPF contributions. This is similar to what is presently done for employees. And this is something to take note of if companies hiring platform workers in 2025. And there has been some changes to MOM Employment Claims Tribunal. This is the expanded jurisdiction to handle salary-related disputes, increase the claim amount up to $30,000 as well. And let's discuss some of the best practices for multinational organizations. Based on my experience managing international payroll operations, here are some of the best practices for organizations operating in Singapore. Um, First one, let's start with CPF calculation. Um, so the employers need to ensure their payroll system can accurately calculate CPF based on age, citizenship status, and wage ceiling. Regular audit of CPF calculations are essential here. Streamlining foreign employee onboarding by developing clear processes for work pass applications, tax clearance process, and levy management is important. Creating a compliance calendar for tracking key deadlines like monthly CPF submissions, which are due by the 14th of the following month, AIS and IRAT submissions, which are due by March 1st of every year. Tax clearance for departing foreign employees will ensure a more compliant payroll process. Document comprehensive compensation policies are essential as well. Creating clear policies for allowances, bonuses, and benefit in kind with specific attention to wage type, um, whether it's an ordinary wage or additional wage for CPF and taxable or non-taxable component for tax submissions are crucial as well. And establishing clear salary structures. Singapore employment contracts typically separate basic salary from allowances and benefits. Having a consistent structure simplifies compliance and communication. And regular staff training is important as well from my perspective. Ensure payroll and HR teams stay updated on regulatory changes through regular training and engagement with authorities like CPF board and IRAS. um, there need to be implementation of segregation of duties, maintaining separation between payroll processing, approval, and payment function to ensure accuracy and prevent any fraud. This concludes my overview of key Singapore payroll challenges and best practices. Now let's move on to. Oh, this is not for me. Sorry.
Okay. Thank you so much, Debbie. Thank you for your brilliant overview. I think there's definitely some things for people to consider in there as well. Some recent regulatory updates from April, some upcoming updates in, I think you said July. So it's definitely something that people need to stay on top of. These things are constantly changing. And it's definitely, you know, a very unique payroll system, especially that CPF system. It's one of those features of Singapore's payroll that you don't really see anywhere else. So it does require that careful attention. The CPF has obviously varying rates, different account allocations. So Debbie, I think you'll probably agree with me there that if somebody is expanding into Singapore and has some questions, it's really super important to reach out to an expert to make sure you're getting those things right. So let's put a few of the concepts into action. Like with the other countries we've covered so far, we will just quickly go through a case study. And Debbie will explain a sort of real life scenario where some of these things are happening and businesses are having some trouble. So allow me to just put that one on the screen. There we are. So here's the case study. So Aerolink are a fictional company. They are expanding into Singapore. They've got a team of 12. It's a regional hub, so it includes expats, local hires, and some variable pay structures as well. Some of the challenges they're facing are the proration of CPF for mid-month starters. Employees starting mid-month were incorrectly issued full-month CPF contributions, which triggered some corrections. They have IR8A and Appendix 8B filing delays. They have some issues with their stock options. They've got a complex leave encashment issue and some director fees reporting as well, where they were paid out without applying the appropriate withholding and declaration rules. Debbie, if you can just run through a few of those payroll challenges for us. We're a little bit short on time, so if we don't cover them all, that's okay. But if you just run through that case study for us, just see some of those concepts in action, that'd be wicked.
Yeah, sure. So CPF for mid-month starters. I mean, payroll systems are nowadays very capable of managing the prorations if the arrow-link systems are using a payroll system. But the important thing here is that for the CPF contribution need to be submitted on 14th of the following month. This is this becomes particularly challenging when you have an immediate starter, like around end of the month, and the company's payroll processing cutoff is around second or third week of the month. Let's say like employers need to arrange an offline submission or some supplementary run to avoid any penalties for late submission. Um, so I feel like this is a bit challenging that the employers need to be aware of, because if they miss the deadline, no matter what, there will be penalties. So on to your first question, proration of CPF for mid-month starters. Um, I mean, like this is easier if the ArrowLink systems has a payroll software, because the payroll softwares nowadays are capable of calculating the proration of salaries automatically based on the salary and the wages paid to the employee in that month. Sometimes the challenge comes from if the employee is starting around like end of the month, where the payroll processing cutoff is around second or third week of the month. So in that case, if the employers are not able to include the employee in their regular payroll, they need to run an offline submission or supplementary run to avoid any penalties for late submission, because no matter what, CPF requires all the monthly contributions to be submitted before 14th of the following month. So that's a bit of challenging for employers, from my experience. And on to your next question. Employees starting mid-month were incorrectly issued full month CPF contribution triggering corrections. Um, any error in CPF contribution should be rectified immediately, like once it is identified, to reduce penalties. Employers can normally submit a corrections with the in the CPF portal. Any request for refund of CPF contributions paid must be made no later than 1 year from the date of payment of the CPF contributions. So also employers need to inform employees before making these corrections, because the total refund amount will be refunded directly to employers. Employers are responsible to refund the employee's share of CPF contribution directly to the employees. But I can say that the process with CPF board is like very clear and streamlined in when it comes to corrections. And the next question is on IR80 and Appendix 8B filing delays. Um, Employers need to ensure tax submissions are completed and IR80 forms are available to employees before 1st of March. Sometimes if they foresee any delays to these submissions due to business reasons, they need to inform IRAS in writing with the expected submission date and need to seek their approval. These are normally handled by IRAS by case scenario. So having that, contacting the IRAS and informing them as soon as possible is key here, I would say. And the next question. Stock options granted to executives weren't included on Appendix 8B forms in time for the annual tax submission deadline. So employers can actually submit an amendment filing or an additional filing. The important point to note here is that the amendments work as an addition or a subtraction basis. And the thing is that they cannot override previous submissions. They should do a correction in the form of addition or subtraction. Okay. Then leave payouts were taxed incorrectly at terminations with no differentiation between encashment and regular salary. Employers need to submit for an amendment filing again. Um, so it works the similar way, like a correction or an amendment. Important thing is that they need to do amendments in the form of additional filing or by do in the form of like addition or subtraction basis, so that amount need to be increased or decreased under the right category. For example, here, so that they need to reduce under the salary and they need to increase the amount under the, like, leave payouts were taxed incorrectly at termination with no differentiation between encashment and regular salary. Um, so this works the similar way. We discussed the other question just now. So employers need to submit for an amendment filing. Um, the important thing here is that the amendment works on an addition or subtraction basis. So the amount need to be decreased under salary, and the amount need to be and the leave encashment amount to be increased on the right category to complete this amendment filing.
So a few of those sort of solutions that you implemented there, we had implementing a proration tool for the CPF, which obviously makes sense for the payroll processing. Looking at the IR8A and 8B preparation for the equity reporting and things like that. And then the leave encashments, which you can reclassify as tax and additional income. Is that from the IRAS rules? It's definitely a really complex payroll system. And there's lots of different rules in there that, if done correctly, will cause fines as well. So as we said before, it's really important to make sure that if you are expanding into Singapore, that you're making sure, number one, you understand that legislation, and making sure that you do check in with an expert as well to make sure that you're not going to get anything wrong from the get-go. We've had quite a lot of questions in actually about the Singapore payroll since we announced that we'd be doing Global Pay Fest. It's definitely one of the trickier regions for people to understand. So Debbie, if you don't mind, we'll just run through a few of those common questions that payroll professionals have sent in to us about managing payroll in Singapore. So the first one, how should companies handle CPF for employees who change status from employment pass to permanent resident?
Yeah, this is a good question because this is a common scenario that employers will come across. So basically, once employer is informed of the citizenship status change, they should complete the CPF filing in the same month as part of their regular payroll cycle. This is particularly challenging again if the employee status changed towards end of the month or informed late by the employee. So in such cases, an offline submission or a supplementary run will be required to meet the due date because CPF authorities are very keen on this, like that the submissions to be done no matter what before the 14th of the following month. If any employer missed the due date, like there will be a penalties on that for late submission.
And how about if the employee had let their employer know late? Would the employer still get the fee?
Actually, employee gets a notification once their status changed. So they need to inform the employer along with their document, because there is there will be a resident number in that document which is required for CPF submissions and everything. So the employer need to verify that information and start processing CPF contribution for that employee.
Perfect. And what are some of the key considerations when paying variable bonuses in Singapore?
Yeah, variable bonuses can be tricky sometimes. Um, the I would say the payroll systems have the option to tag the bonuses under the right category, which is essential for the right contribution of CPF amount. So even in their contract, when designing the contract, the employers need to put enough care to classify it correctly, or to draft the policy correctly when it comes to the variable bonus. And they have to ensure it is tagged under the right code, whether it's ordinary wages or additional wages, when it is tagged in the payroll system, so that they can be, stress free when it comes to CPF contribution and reporting.
Super. And how should employers handle employees who reach 55, 60, or 65 in terms of CPF contributions?
Normally, payroll system nowadays are capable to manage this within the system, but I would say still periodical review of CPF contributions, um, or before year-end tax reporting will be helpful for employers to manage this accurately.
Okay. So I think, a lot of these systems nowadays can identify those changes in advance and make sure that things aren't being missed.
Yeah.
But obviously make sure that you double check in, don't rely on the system to do everything for you, because it's not the system that pays the fee, it's you if something goes wrong.
Yeah.
So in terms of tax clearance, what are the requirements for a tax clearance when a foreign employee leaves Singapore?
This is an important question and important topic in Singapore, because employers need to submit IR21 form at least 1 month before their last day. Employees' last day, and employers need to include all the benefits that are awarded, uh, not only though that are processed in payroll. They need to report all the benefit in kinds and equity shares related information in the IR21 submission. And employees salary need to be withheld until the tax directive is received from IRAS. So the employers need to inform this clearly to the employee before withholding the payments, to make to give time for employee to plan their finances. And another important point is there is a deemed exercise rule in Singapore. So employers need to report even the unexercised or unvested ESOP or ESOW at the time of employees leaving a company. Employee can apply for a reassessment of the deemed gain within 4 years from the year of assessment, post exercise or vesting of shares. I mean the actual exercising or vesting of shares. Now, recently there is an alternative to the deemed exercise rule, which is called a tracking option, which allows an employer the option to track when the ESOP or ESOW is exercised or vested. The employer can track and report the gain from the ESOP and ESOW on actual realized gains, instead of submitting the unexercised or unvested shares. So the employees will be assessed on such gains based on his tax residency status at the time that the gain arise. The employer will need to meet the qualifying condition and apply to IRAS for this tracking option. Otherwise, they have to follow the deemed exercise rule. Yeah, this is very important for employers to take note when they are employing foreign employees in their business.
Yeah, definitely. It seems like there's some quite complex rules there on what to do if a foreign employee is going to leave Singapore. So definitely something to understand, like you said, Debbie, before taking on a foreign employee, to avoid finding yourself in a bit of a sticky situation later on.
Yes.
So what about when public holidays fall on a weekend in Singapore? How should employers handle that?
Um, a general thumb rule here is if the holiday falls on a rest day, it should be compensated with an alternate day of leave. Um, for example, if the employee works Monday to Friday and their weekends falls on Saturday and Sunday, and normally what companies does is they provide the following Monday as an holiday, or sometimes companies have the practice of adding their increasing their 1 day of annual leave or awarding it to employees in terms of time off in lieu. So basically, they need to compensate if there is any public holiday that falls on weekend.
Super. So they are completely mandatory to take.
Yeah.
And if you can't take it on the actual day, it's important to make sure that they get that in lieu.
Yes.
What are the requirements for reporting employee stock options and share awards in Singapore?
Um, Reporting employee stock options and share awards. Um, so as we discussed before, so shares need to be reported using Appendix 8B form, using 8B form, end of every financial year. Generally, the taxing point is when the shares are exercised or vested. And good thing here, there are no taxes on capital gains in Singapore. But employers need to be careful because they need to, though the taxing point is when the shares are exercised or vested. This does not apply if they have a foreign employee who is leaving the employment. They need to use the deemed exercise rule. Otherwise, for all other employees, Singapore permanent residents, citizens, and even the foreign employees who are an existing employee with the business, they need to report using Appendix 8B form.
Perfect. And Debbie, for people who are maybe setting up their operations in Singapore for the first time, what are the key payroll considerations that you would suggest for someone who is setting up their operations in Singapore?
In terms of Singapore Employment Act is very comprehensive, and it gives more importance for working hours, rest period, etc. So it is important companies frame their policies and contracts based on the Employment Act and MOM regulations. Other than that, like I would say there are a few registrations which are mandatory. So in terms of CPF, they need to register with CPF, and they need to apply and obtain a CSN number, which is actually CPF submission number, which is needed for submitting monthly contributions, and they need to plan about the payment method with CPF. Normally, direct debit is the most common method used by companies. And mm, with regards to tax, employers must register with IRAS and they need to obtain a tax identification number. Um, Application for AIS auto inclusion scheme is mandatory if they have like five or more employees. These are some of the things, and I would say another must have is a worker injury compensation insurance. As per a Worker Injury Compensation Act, the employers need to have this insurance. This should cover all employees and regardless of salary level. There are some exceptions though, but these are and they have to ensure all of their employees, especially like the foreign employees, have their right to work in Singapore before they, like they employ them for work. So these are the important things that employers need to make note of before setting up a payroll in Singapore.
Perfect. Thank you, Debbie. I think I'd probably saved the most complex one for last. So what payroll challenges should companies anticipate when they're transferring employees to Singapore from another country?
I think it's a very detailed topic, but because there are different um, kinds of transfer, like it may be a short term or secondment or like a permanent transfer. But I would say in general, companies must ensure they are compliant in terms of visa, tax, and social security regulations. And they have to ensure the employee holds the correct work pass for their role in Singapore, and there is no requirement for tax registration for the employee, like other countries like Australia, because the foreign identification number given to them as part of their work pass serves as tax identification number. Um, so um, and the employers need to um, make employee understand the tax residency status, because if they worked more than 183 days in a financial year, they are considered as tax resident. Otherwise, I mean, if it is less than that, they will be regarded as a non-tax resident and will be taxed at like the non-tax resident rate. And the when it comes to the when it comes to tax, income earned in or derived from Singapore is chargeable to income tax. Um, so while overseas income received in Singapore is not taxable, so any income that is related to Singapore employment is taxable. And they there need to be tax clearance requirements if the employee who transferred to Singapore is ceasing their employment for um, some personal or business reasons. I think, and because there is no requirement to pay CPF contribution. So I would say these are the important thing that um, the companies need to be aware of. And the other one is like based on the work visa, there will be whether they are subject to levy. They are, I mean, the companies that rule may be subject to levy or not. Is decided as well. So that is something the employees need to identify before employing a person, or before transferring a person from another entity to Singapore.
Amazing. Thank you, Debbie. Again, so much to consider there. And it's definitely not as easy as just getting someone in who can do the job. There's so much kind of work that goes into it beforehand. And as always, you've got to make sure that you're understanding all that legislation and understanding who to talk to and where to find it, to make sure that if you are setting up operations in Singapore, that you are doing things right. So I think we're coming towards the end of our Singapore session. So I want to say a massive thank you to Debbie for sharing knowledge with us all. Debbie, you're amazing. Ever since we met in London, a while ago now, sort of earlier on this year in January, I was just completely taken aback by your knowledge, your ability to help people to understand the complexities within payroll as well. I think, you know, somebody can hold all of the knowledge in the world, but being able to deliver that and share it for other people who maybe aren't so confident is so important. Because we've definitely learned in the last hour it's not as easy as just heading to Singapore and setting up your payrolls. So I really appreciate your time, Debbie. You've been absolutely amazing. Singapore definitely has a very unique payroll system. I've still not brought my head around that CPF framework, and all the different specific requirements for employee categories, you know, the retirement ages, different tax brackets. I think, you know, you've got to be an expert really to understand all of it. So again, thank you so much. For our audience, I really, really hope this has helped. If you are expanding into Singapore, or if you're already managing the Singapore payroll, and you just wanted to upskill or brush up a bit on your knowledge, as always, this session will be available on demand after the event. So if you want to revisit it or catch any of the sessions that you might have missed, you can find all of the sessions, all 24 hours of them, on demand once we're finished. Debbie, is there anything you'd like to add before we sign off on this one?
Thank you, Natalie, and I'm really delighted to be part of this Global Pay Fest 25. And in a short, like Singapore payroll is I would say the regulations are very neatly streamlined, but the strict adherence to employment regulations are mandatory. And even the government authorities like CPF and IRAS, they provide enough support by promptly responding to any queries within their limitation. This is another amazing thing that I liked about Singapore. And thank you to you, Natalie, like for for this opportunity to share my insights about Singapore. Thank you all for watching. Happy paying.
Thank you so much, Debbie. This is the end of our Singapore hour. You've been amazing. Our audience has been amazing. I'm super, super grateful for you sharing your insights. So if you are staying with us, we're moving on to Hong Kong next. Grab a coffee. We've got a couple of minutes in between now and the next session. But stay tuned, because Hong Kong's another one of those super complex regions to understand payroll in. And we'll be here for another 21 hours. So see you soon. Thank you so much.